I want to bring in Scott Bauer, who's the CEO of Prosper Trading Academy. He's joining us this afternoon for a discussion related to the dollar. Scott, good afternoon. Welcome. This week it's been moving. Hey, Scott, it's been attracting some attention back above the 94 level and, well, impacting commodities, oil and gold on the move. So you got some energy stocks, you got some miners that are on the move. Let's talk the greenback first, though, and that recent bid. It seems to be tied to stimulus measures slowing a little less in terms of really aggressive measures on behalf of the Fed and lawmakers. And, well, also you've got some weakening in the British pound, uncertainty there. There's a couple catalysts here that are providing this lift in the greenback.
No doubt about it. And you know, fundamentally, it's difficult for me to understand the strength that we've seen based on what the Fed has said or based on, you know, stimulus measures.
Yeah.
Now, compared to what's going on in the UK, yes, I can see that. The pound has weakened quite a bit. There's a lot of uncertainty there. But going back to rates here and the Fed and, you know, just their rhetoric here, I mean, how many times and how much they have to pound the table to say that rates aren't going anywhere for, you know, the near future and quite frankly, the foreseeable future. So it's a little bit, you know, difficult for me to understand the fundamental why we've seen the dollar rally, other than maybe it just got, you know, sold off too much. Yeah. But I think you have to meet this dollar rally with a sell in it. I really do.
Yeah, it's interesting because, again, you've got the indices which are coming back. I was looking at the dollar, and maybe it was a safe haven type move, but the yen wasn't really benefiting. Gold certainly has been lower. Let's talk about the impact that it's had on crude products. With crude lower, that oftentimes impacts some of the refiners. We talk about some of the big names that get impacted. Now, it looked like I saw Chevron, I saw Hess, both got downgraded at Scotiabank. CVX downgraded to sector perform from sector outperform. CVX, well, both actually did down to sector perform from outperform. CVX with a target of 95 and Hess with a target of 55. Do you see anything that stands out to you in terms of one of these names versus the other here, Scott?
Yeah, actually, I look at them quite differently. CVX, I can absolutely understand the downgrade from a technical standpoint. You look from June to basically August, and the stock traded up to its 50-day moving averages multiple times, could not break through. So technically has broken down. That being said, there is a lot of call buying there today. There really is a lot of call buying in CVX today off of this downgrade. Hess, similar chart, could not get past the 200-day moving average, and to me now is really in no man's land. They're almost an exact chart, but it's really in no man's land. But Hess today, there's a huge amount of put buying. Okay. In fact, about 90% of the volume being traded today after this downgrade is on the put side, where CVX, there was a lot of call buying. So it's going to be interesting to see where these two stocks go from here, because they have been trading pretty closely in tandem with one another.
Okay, we'll keep an eye on them. Both, for the most part, rolling over here. As you mentioned, some key moving averages in play. Let's talk a little bit about how this is also impacting the gold market. Interestingly enough, you would think gold would be bid with the indices selling off, but maybe that points to investors not really very fearful of the sell-off that we're seeing, more so just kind of losing some of the froth and taking off some of the edge that had been there in terms of things getting a little bit bid up too high, too fast maybe. But gold not really reflecting, again, the indices selling off, but certainly we're seeing gold a reflection of the strong dollar. It's been coming off now. That has an interesting situation developing here, because we've got some names. Anglo, we've got on our radar. NEM, Newmont Mining, it looks like you're dialed in on, and Barrick. Also, it looks like they're bid today. What are you seeing in terms of the miners?
Yeah, really interesting here, Ben. If you look at the gold space versus the dollar over the last 6 months, it's almost a mirror image of one another. They've moved lockstep, you know, opposite of one another. So there's no question that we have some weakness in not just gold, but the miners as well, as the dollar has rallied. But I think what's really important, Ben, is you mentioned this here, that gold is not rallying as there's maybe been a little bit of a risk-off type of sentiment here. And maybe that's because retail and investors and traders don't really see the sell-off maybe going much further, or they're not as afraid of it. And I think what that really points to, Ben, is the psychological part of trading and the psychological part of the market. Back in March, when we saw the massive sell-off, nobody knew what to expect. Yeah. We've now become, I don't want to say we've become a little numb to it, because certainly nobody wants to see the sell-off and it's legitimate, but But, that's why volatility is also 28, 29 in the VIX and not in the 50s or 60s. So that edge of maybe some of that, risk off sentiment here has been taken out of the gold space. It really is. In terms of some of the miners, you look at AU, and that thing is down right at the 200-day moving average at 26. And you look at gold, and that's not far off its highs. It really hasn't come too far off its highs, but it has broken down below its 50-day moving average. And then in Newmont, trading 61-ish from a technical standpoint, really in the middle of no man's land. So out of those three, AU is the one I'd be looking at to probably scoop up here, because technically at that 200-day moving average could be a nice opportunity.
Okay, Scott, gold, I'm thinking about it, and I'm wondering, here we can see Newmont coming off, almost identical in terms of what we've been seeing in the gold chart. We talk about how these stocks aren't necessarily a proxy for gold, but we talk also about how they're oftentimes very correlated, closely tied. Scott, with gold coming off here, I'm wondering your thoughts, because one thing I've been talking a lot about is it seems to be we lost some of the momentum to the upside as we lost some of the real kind of foot on the gas pedal type measures or initiatives that we were seeing not only from the Fed but also from lawmakers. They're dragging their heels in terms of the most recent stimulus package right now. And I mean, I guess some of this could be tied to the U.S. dollar, but ultimately there was a lot of expectations of inflation that all the stimulus measures were going to bring about. We're not seeing the inflation, and if the stimulus slows right now, ultimately, well, you can understand why the rally, that run up into the 2100 level, has slowed as well.
Oh, there's no doubt about it. I mean, from the fundamental standpoint, everything that you just mentioned is right in line, and right in line with the sell-off we had. That being said, I wouldn't count gold out here. Okay. Yeah, it's been, down and it's trading sub 1900 now, but I certainly wouldn't count it out.
Yeah, I like that. I mean, this is still a well-defined trend to the upside. It's got some more ways to go before I would consider it breaching that trend environment. Right. That last area consolidation, really well-defined area consolidation we saw around 1725 back in April into June, the middle of June. Here you can see the well-defined inverse correlation that's been playing out this week. Hey, Scott, really appreciate you giving us part of your Thursday afternoon. A great breakdown in terms of a few individual names that are on the move in reaction to some strength we're seeing in the dollar. Gold, crude selling off, a couple downgrades, and, well, a few names that you have your eye on and think we should as well. Ladies and gentlemen, Scott Bauer, the CEO of Prosper Trading Academy. Thanks to you, Scott.